All right, everyone, let's get into another educational video. This is 100% educational. It is not an investment recommendation. This is an analysis of something that has already happened, where a trade was made in a closed environment following the rules required by the CVM and the SEC. And our clients were also able to learn and catch these movements in practice. But this is purely educational. It does not constitute an investment recommendation. And today I'd like to teach you in a practical way how options trading works directly on the American stock market. So look, we're talking about a company here. I'm not sure if you've ever heard of it, but it's Comcast Corporation. Basically, it's a major American media company, owner of a series of portals, television networks, and newspapers in the United States. So it's called Comcast. Basically, Comcast hadn't been pleasing its investors very much since February of 2024. From February of 2024 to December of 2025, its shares fell by more than 37%. In other words, at no point during that time was it an interesting moment to buy the stock. And what do we do when we want to buy a stock in order to profit from its rise? Let's pause for a moment and make a little detour here so you can understand how a clothing business works, for example. If you see that jeans with a rip at the knee are going out of style, that people are stopping to wear them. If you own a clothing store, are you going to buy those jeans and put them on your shelf hoping that customers will buy them? You'd most likely lose money doing that, right? If you have a store with summer items but winter is starting to arrive, are you going to stock up on summer clothes to face the next 6-month season, which will be winter? You'll probably lose money, or at the very least, you'll have 6 months where you won't sell those clothes. So it's exactly the same thing with stocks. When we identify that a stock is going out of style, that people don't want to buy it, large investors, big funds don't want to buy it anymore, it starts to lose value, it starts to drop in price. And that's not the time for us to buy. So what do we need to do? We need to look at the American market, at the more than 20,000 stocks that exist, to see which of them are attracting investors' attention. It's like, what's the new trend that's going to emerge in the coming weeks and months? And then we identify that movement. So from that movement in 2024 until now, Comcast has not attracted the attention of investors. But now, this week, it started to attract attention. And this small bit of interest from investors in these shares gave us the opportunity to ride this wave. It's the same thing. Look, black sneakers with white soles are coming into fashion. Hey, let me buy some stock, put it in my store to sell, right? So basically, that's what we did here. So we identify through many studies what the investor's intention is. So we identified here that on December 15th, there were many investors interested in buying Comcast. Basically, on December 15th, we had 40 million purchases and sales of Comcast shares happening. 40 million shares of Comcast shares being traded. And that sparked our interest. Look, a lot of people are starting to look for Comcast. Within this market, the stock market, there's a contract called an options contract. So there are the stocks and there are the options. And what's the difference in this whole story? The difference is, okay, we've already identified that investors, more than 40 million of them, bought Comcast shares, and the stock might go up in the coming days as a result. And so I can buy a share, okay? Let's say buy a share at $28.20 each, or there's an options contract that's costing me $1.46 each. Okay, so it's a contract called a derivative. Here on our page, you've probably already seen me explain this in detail. But what does this mean in practice, folks? Look, for $28, I could buy one share, or for $1.46, I could buy one option. What happened to the stock? It went up in those 2 days, okay? It was a very strong, very explosive movement. $2.10, okay? It went up $2.10 in 2 days. So it went from $28.20 to $30.30. It went from $28.20 to $30.30, basically making this nice upward movement, okay? Now let's do the math. Oh, and in parallel, the options that were worth $1.46 went to $2.97. So $1.46 went to $2.97, more than a 100% positive swing. Look at what a cool calculation. This is a business, okay? So I identified the trend, what the customers were looking for. I bought some stock, put it on my shelf, and waited for them to come looking for me. And then I'm going to sell, right? 2 days later with my profit margin. But this here is a cool point. If we buy the stocks, simply put, it went up to $1.10, okay? So let's say that for us to make $1,000 profit here, I would have needed to buy 477 shares. 477 shares at $28.20. I would have needed to invest $13,451, right? So whoops, times 28.20. I would have needed to invest $13,451 so that in those 2 days, based on the price I paid for my shares, I could sell them at the current price and make $1,000 profit. So I would need 477 shares to make $1,000 profit. Now look how cool it is with options, folks. When we have 1,000 options times 146, I invested 1,400. You don't even need that much, okay? Let's see. $1,000 divided by 146, I would need 700 options, 680 options. At 146, 680 options at 146, we have $992 invested here. Didn't it go up to 297? So 297 minus 146 times 680, we have the same $1,000 profit. So for me to be able to make $1,000 in my stock store, in those 2 days we identified the stock went up, I would have needed to buy 477 shares. However, since there was an options contract with 600, let's even round it up, right, to 700, because options are traded in lots of 100. So we need 700 SON options at $1.46 for $1,022. I made the same profit by investing 13 times less. That's what setting up an options store in the American market is, okay? And waiting for the best moment. And you must be asking yourself, wow, how is all of this done? All of this is done through the brokerage's app. When you have a knowledge base to know among the more than 20,000 stocks which one is in fashion with this potential to rise, you just need to place the right orders with the number of shares or options you want to buy. And we help you with all of that here in our club. You don't need to be a genius to filter through all those 20,000 stocks. We have a lot of technology that does this for our clients. So this is educational content that shows you how it's possible to set up a store of stocks and options and within 2 days have clients wanting to buy from you for a profit of this size. So does this happen every day? No. We're going to wait calmly for these best moments to occur, and that's how we'll multiply our savings. So basically, this is a practical lesson explaining to you how this business works in practice and how you can have a second source of income by buying and selling stocks and options directly on the American market at opportune and specific moments. Let me reinforce this once again. This is not an investment recommendation. It is 100% compliant with all regulations. This is an explanation of the price behavior of an option in relation to the stock. The stock went up and the options went up much more. This is the amount of money we put into the stock and into the option. It's all 100% educational. This does not count as an investment recommendation, just as future results are not guaranteed to be this easy and pretty. We have a very high success rate and we're able to make a very good salary from the market, but it's not guaranteed. It's a business. Every time you buy a product and put it on your shelf, you don't know if you're going to sell it or not. It's the same thing. It works like a business, but a business of stocks. All right? God bless you all. A big hug and bye-bye.